Are you normal? Do you know what normal is? Today's topic for my video vlog is about normalizations and what to expect in a business deal. I know most people have some experience with residential real estate, and there's a lot of norms in residential real estate. When you buy a house, you're probably going to get a fridge. The real estate attorney probably has a standard closing statement. There's a lot of stuff you probably know what the commission's going to be, although that's changing a lot with the NAR lawsuit. So my point is, with residential real estate, there's a lot of norms, but in business transactions, what is the norm? It can be really hard to know. It really depends on if it's small business, if it's business, big business. I'll give you a few examples. This stems from an M&A class I'm taking right now, and the instructor was talking about quality of earnings reports, which is a report that it's basically a deep dive into due diligence. These reports can cost $20, $30, $50,000 or more. And the instructor says, and the person who pays for it is the buyer or the seller, or they split the cost. There's no norm. And this is a common thing with business deals. There is no norm. Another one is the asset allocation of a business. If you're selling your business, you need to know what your asset allocation is for tax purposes. It's sometimes just as important as the purchase price is what is the asset allocation. Guess what the norm is? There is no norm, right? So you can advocate. We like to start with what the seller's books are, but the buyer and owner of the business can agree on anything that they want to report for tax purposes. So there is no norm. I'll give you one more example, and that's gift cards. When a retail type business sells and they have outstanding gift cards, what happens with those gift cards? Does the buyer absorb them dollar for dollar? Does the buyer and seller agree that the redemption rate's half, so they split them in half? Do the gift cards expire on their own? So you could do some type of calculation based on the outstanding or add breakage to that. The answer is there is no norm. It's whatever the buyer and the owner agree upon. Now, the good news is intermediaries that do these deals a lot will kind of see what their norm is, what has worked for other buyers and owners getting through this process in the past. That's about as close as you can get to a norm in a business deal. So that's my takeaway from this video. Is a little self-serving, but work with an intermediary, right? Figure out what the norms are, not just an intermediary, but work with a deal team. Work with a transaction attorney that can tell you what's common in transactions. Work with your CPA to talk about some of the asset allocation stuff that I got into. Make sure these professionals do business deals. Don't work with I always joke, don't work with your DUI or your divorce attorney to get your business deal done, right? Work with a transaction attorney. Work with a CPA that specializes in transactions. Not all CPAs do transaction work. But this is where we're going to start to get to what the norms are. So what is the norm? Good luck in a business deal. We can take you pretty far with what a most probable sales price is, what the valuations are, but when it comes to getting the transaction done, gonna have to work towards a solution, thinking about all of the different factors at play. And that's why it's fun, right? Because every deal is unique. Hey, I hope you found this interesting. I'd love to share this type of content on these YouTube channels, and because I have all these questions myself. If you have a question about something like this, then put it in the comments or reach out to me directly. I'm easy to find on LinkedIn. Till next time.